Thank you, everyone, and thank you for participating in this incredible conference and the summit, and specifically for being part of this panel on digital inclusion between Africa and Asia. We have some incredible panelists on stage today. There's been, as we all know, with some of the world's fastest and youngest growing populations, with much higher internet penetration, mobile connectivity, Africa has always been touted as the next digital frontier, but it's only been in the last 3 to 4 years when we've seen proof of that happening so rapidly. So just some numbers for the benefit of our audience. The economy in Africa from an internet perspective is forecasted to contribute $180 billion by 2025 and $700 billion by 2050. We've got an increasing opportunity from a fintech, e-commerce, agritech, and health tech perspective. And some of the transformative technologies we have seen are being driven by technology startups versus corporates and governments, which were the forefront of the African economy for the last few years. Leading that charge has been the fintech industry, from the early days of payment providers, payment gateways, now blossoming into new sectors like logistics, mobility, e-commerce, all driven by a strong financial inclusion mindset. So we're very honored to have 4 pioneers in this space here today from different sectors: digital banking, mobile and logistics, e-commerce, on our panel today, and technology. And it's going to be a very interesting discussion, and we're looking forward to some interesting questions from the audience. So I'm going to start off just asking each of our panelists to just say a couple of lines about how they started their particular venture, what led them to where they are outside of what everyone already knows. So I'm going to start with my closest neighbor physically, Kun Jonker from Time Bank. Kun?
Hello, Zach. Hello, everyone. I'm the founder and CEO of Time, and our business really started from a passion for financial inclusion. And for us, financial inclusion is really about human potential, about a conviction that people don't need saving. They just need to be given the tools that middle class and wealthy people in wealthy markets take for granted. And if they get those tools in a way that is emotionally accessible, that's physically accessible, and that's affordable, that they can make their own success. Zach, as you know, we've grown in South Africa to 3.6 million customers in the 2 years since we've launched, and having a lot of fun learning from our customers and working with other creative people and other innovators in the market.
Thank you, Kun. We'll certainly dive into those very attractive numbers soon. It's very, very impressive from a growth perspective. I think what you've achieved in the last 2 to 3 years is where some comparable digital banks in Europe would love to have been in their first 2 or 3 years of operations. We'll get into that a bit later. Thanks, Kun. Ashraf from Fowry, you want to say a couple of words, a lot of sentences about your journey in building Fowry? Helping build Fowry. You're on mute, Ashraf.
I'm just fixing that right now. Well, thank you very much for having me in the panel. Well, my story started driven by investors. So I was working for a company and, visiting investors for capital increase or for listing. And all of them were asking me a single question, where is the recurring revenue in your business model? And our business model was technology, actually, so it was project-based. So then the recurring idea came as something important from the perspective of investors. So then we thought what would be recurring, and payment came as something that is matching. And then you started with trying to help banks to enable their customers to pay their bills, and then you had an opportunity to go and build an agent network so that unbanked customers pay for their bills. And then you start, with technology evolving, adding new services by having a direct-to-consumer app, or mobile app, by having e-commerce enablement. So the nice thing about really what happens in technology is the ability to continually and continuously, find opportunities, integrate with other partners, bring services to the front end. And this is really what is exciting about the whole story. So it was an investment driven for a technology guy to start something.
Yeah, and you've had an absolutely inspirational movement, almost like a revolution, not just within Egypt, but the entire sort of North African region, where a lot of entrepreneurs who would never think of pursuing technology entrepreneurship as a career have been tremendously inspired by Fowry. And I'm sure this is the first of many, let's just not say unicorns, but revolutionary tech businesses on the continent. Juliet, the chairwoman of Jumia Nigeria, be a couple of sentences about your journey to getting to where you are today. You're on mute, Juliet, sorry.
Yeah, thank you, Zach. So Jumia, we started about 8 years ago. And when we looked on the continent, the same way we looked at opportunities, whereas today we have about 1.3 billion people on the continent. We have 500 million, already internet users. We have 17 million SMEs and merchants who want to trade with consumers. And yet we had an environment where distribution was so inefficient. Outside of South Africa, the penetration for modern retail was very, very limited. So that's the opportunity that we set out to solve, to create a platform that's an integrated marketplace, logistics and payments that allows sellers, SMEs, micro entrepreneurs, youth, anyone, brands, established brands as well, to connect and transact directly with consumers. And it's been incredibly interesting and very, very exciting journey that we've been on. And we see a lot of potential. There's still a huge, huge opportunity and space to grow in Africa.
It's incredible. CK, a couple lines about your journey through Ascent and before that for everyone's benefit.
Hi, everyone. Very good to be on the panel itself. So about 10 years ago, a team of us left a Lockheed Martin company. And after we left, we started building technology that is based on GPS tracking. And surprisingly enough, the first country that we chose to deploy these technologies in Africa. And it's been 10 years on, and we continue to use that set of technology to track electronically cargoes that are in East Africa, West Africa. We've seen, kind of like expanded the scope to even track cargoes that are at sea. And a lot of these are actually on behalf of Revenue Authority. So I think the journey and as well as the opportunity in Africa is exciting, especially for a lot of, the Asian companies. Thank you.
That's incredible. Thank you, CK. We're going to delve more into sort of the differences culturally, economically, and possibly even politically between Asia and Africa. And I think someone with your experience would be a great value add to that discussion. We'll get to that a bit later. I'm going to start off with something quite broad. And there have been so many recent developments, very interesting developments in this space. I'm sure everyone here is aware of the big news coming out just yesterday about yet another African technology startup in Nigeria, OPay, SoftBank's first investment in the continent, valued at $2 billion for a $400 million round. And it's just getting bigger and better and bolder. But if you take a step back and look at the history of tech innovation in Africa, it started off with mobile wallets with M-Pesa in Kenya more than 15 years ago. E-commerce through pioneers like Konga and now Jumia, fintech through the payment gateways, agritech, logistics, mobility, and then you look at clean tech, off-grid energy, health tech. So from a holistic perspective, as four of the pioneers, in this industry, what are some of the key factors that you've seen that have led in driving the adoption of these key technologies on the continent? And what were the factors at the start of this revolution, if you want to call it that way, 10 years ago? And what are some of the newer factors right now, high level? It could be, consumer, broader consumer engagement. It could be a better mobilization of the youth. But what, in your opinions, has sort of driven this key adoption of technologies? Maybe I'll start with Juliet from your perspective.
Yeah, thanks, Zach. In my view, I think it's because technology has a democratizing effect, okay? If I may use that word. Because when you look at, I just take two areas. Take banking. 10 years ago, you had to be nicely dressed and clean and all that to go to a bank, to be able to, and then you get on a queue to get a form, to register, just to open an account. Okay. Now, if you were a guy who was just a kiosk trader on the street, you don't want to go in. It's too intimidating, right? And then you have technology that allows you on your mobile phone to be able to open an account. Of course, you jump on it. You take retail, okay? If the only option I have is that I have to, dress nicely, go into a modern supermarket, and then get on the line, and that there's no haggling that is required, and there's limited choice. I can't go to like 10 different supermarkets just to compare prices, right? I'd rather go to the open market, which again is hot, is uncomfortable. There, people are shoving at you. It's very uncomfortable. Those were the extremes that people had, right? And then you bring technology. Technology breaks down all the socioeconomic barriers, allows me to use my mobile phone to select among thousands of options of a particular item, to pay, and it gets delivered to me. So technology has had a democratizing impact in Africa. And that's what's attractive for people. And that's what makes it attractive beyond just the middle class, because people typically think, oh, it's for the middle class. No, 25% of our deliveries are in rural areas. And I'm talking about even places that are islands that are difficult to reach except by boat. So that's the impact. And that's what I think continues to drive the penetration of tech-driven products and services in Africa.
So true. I couldn't agree with you more on that. And associated with that is a cost of data that I'll get to in my next question. Maybe CK, from your perspective, running a major Asian corporation but with significant clientele in Africa, what's your experience been about what led to this massive increase in technology adoption?
I think so it's quite similar to how China have actually, come ahead of the world. Part of the key reason is because there's no, they have very little legacy. If you don't have the old copper wires to worry about, you start with fiber. So I think Africa has the same, on the same note, has been able to leapfrog, in a very big way when it comes to technology adoption. So that has actually allowed, some of the latest and the best technology to be trialed, to be used, and in fact, the adoption rate could be a lot faster. So I'll give you an example, which is, like recently we were talking to a commodity trade exchange. They were starting, they were telling us that they are still very manual. It was still a very manual exchange. But instead of just looking to digitize the exchange, they were asking us if we could provide them with a blockchain-based exchange. Meaning to say they want to leapfrog straight away into a blockchain-based exchange and then have the ability right now to trade fungible, non-fungible tokens and have the ability to link to fiat, link to the likes of Libra, links to the likes of Bitcoins. So I think this is where Africa could now, lead the world in terms of adoption of technology.
That's great. Completely agree. Kun, you've come from a very respected career at Nedbank, Standard Bank, ACB. You spent most of your career in brick and mortar financial institutions. What excites you about your role at Time Bank and the sort of change in consumer mindset from adopting technology that wouldn't have been even dreamt of 10 years ago?
Zach, I love the way Juliet put it around democratization that is brought about by technology. The thing I would add is really difficult problems. I think one of the blessings in Africa is that Africa has really difficult problems. And if you can solve them, because there's scale in those markets, the prize for solving the problems is huge. And I think what we loved about Time, starting Time and running it now, since it started in its first form in 2012, is the joy of actually being able to be in a creative and in an entrepreneurial setting to actually go and meet these difficult problems, and actually then seeing the impact that your work makes. The nice thing about Africa, and I think a point about CK's point about the opportunities to leapfrog. The great thing about Africa is if you can find a solution at scale, you can really see the impact. The one thing I would say, what is the difference between a neobank in South Africa or elsewhere in Africa and a neobank in Europe? And that is that neobanks in Europe tend to be niche players. They're sort of eating at the edge of a very established system. Whereas in Africa, if you're a successful neobank, you can become the market. You can become the next big thing, and you can actually meaningfully disrupt what's already there.
Yeah, that's such a good point. I mean, I've got a bit of experience as one of the top VC funds in Africa and accelerators. We've backed several digital banks in Africa, and I can tell you now, I mean, to your point, if you look at more quote unquote first world economies, and by the way, I'm not a big fan of the word first world, third world, but if you just for a second hold on to that, digital banks in Europe, if you look at the likes of N26 and Monzo and even Chime in the US, their primary revenue is just interchange fees on debit card swipes. In places like Latin America and Africa, I mean, Nubank is the world's most valued digital bank at about $35 billion and 25 million customers. And they have multiple lines of revenue. They have net interest margin, they've got savings, they've got data, airtime, all that. So the world is slowly awakening to the fact that sort of Asia, Southeast Asia, Latin America, and Sub-Saharan Africa and North Africa, once technology penetrates into a much larger consumer base, the adoption rates could completely dwarf what you see in Europe and the Americas. Quick note from Ashraf. I'm sure you probably echo a lot of the panelist sentiments, but just your thoughts and your journey through Fowry the last few years. What did you?
I agree with every word that has been said. But maybe just to add another angle to the same notion, I think the concept of platform in technology is a new concept. And the platform concept has enabled services to come to the mobile and have enabled organizations to interact. So paying a bill, if you cannot connect to the biller, it is difficult. Buying a merchandise, if you cannot connect to the merchandiser, it is different. Buying an insurance policy, even doing KYC digitally. So what I'm trying to say that this platform concept have enabled connectivity between different businesses and have enabled bringing the services to the end consumer through different layers. And what you can notice right now is that the boundaries between businesses have vanished. So you will find a bank working in insurance, working in promo codes, working in sales. Things is completely different. This is one. The second thing is the mobile have changed the world, and we have to agree with that, because if the same front investment for poorer people was still there, like you have to have a laptop, you have to have ADSL connectivity, blah 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 blah, the adoption would have been smaller. So I think that the mobile penetration have helped a lot. The third factor, which is important, is the demographics. And we are all serving consumers. The new generations of consumers are different. And the reality is that you are solving problems for those guys, but they are ready as well to take the risk and adopt those technologies. So when you add the three factors together, you'll find that each of them is helping in democratizing services to the final consumer. So I mean, I cannot agree more with all the panelists, but thanks to technology, I mean, what's happening is amazing. I mean, really because of technology.
Thank you, Ashraf. I think a key cornerstone of this technology adoption has been just the penetration of mobile and internet on the continent. And that is a very broad, fleeting statement, but you cannot ignore the fact that as little as 5 years ago, the cost of data on the continent was just exponentially prohibitive. I mean, people could not bank online, buy things online, do education or healthcare online. It was just too expensive. So, to what extent, in your opinion, across your different sectors, banking, e-commerce, logistics, and technology, has the cost of mobile data helped with the disruption, especially when you look at things like the gig economy and the sharing economy? How critical has that been, and where do you see this going forward?
No, I think, I mean, it is again, the mass. I mean, when the mass comes into the picture, prices go down. It was the same for voice. Okay, I remember the first mobile handset I bought. I remember the first plan for voice I subscribed in, the first plan for data. What's happening is the ability to include many people is generating mass economies. And mass economies have been reflected on the adoption. The other thing, and the prices. The other thing, the technology itself is becoming cheap. And the sharing concept, again, is becoming more. So, I mean, you will find more mobile operators sharing the same tower now. This was not there before. Sharing the platforms again. What I'm trying to say is the concept of sharing and connectivity. I remember, and maybe all of you would remember the slogan of Nokia, connecting people. And it is about connecting people and connecting business. This is what's happening right now. And this is what's bringing the services to your mobile handset. So I think it is a normal evolution for something that started with scarcity and then have evolved into mass. And it is compensating because of the mass economics, the operators and the data providers because of the mass.
Yep, absolutely. Anyone else? Just feel free to comment. CK?
So on the aspect of industrial IoT, you find that M2M platform, the machine-to-machine communication platform, I mean, it is enabling, fantastic sort of like price differentiation. So in the past, 10 years ago, when we were first in Africa, I mean, the price of data is probably even more expensive than what we charge for, say, the device and the services and the platform. But today, for as little as like $2 a month, I could have a device that roams internationally, including in almost every country in Africa, except for one or two of the African countries. Otherwise, one price point, and I've had 130 countries, and we're able to now get it, all the way throughout Africa. So think of it, both mobile data, and even on the aspect of satellite, right? It used to be so expensive, so prohibitive. Today, for as little as $1 a day, we could get satellite communication within Africa. So that is a very big game changer for us. So we are able to now to track cargo moving from the coastline all the way into the hinterland without any disruption for very little amount.
That's brilliant. Juliet, was there a big inflection point in Jumia's customer adoption in that respect?
I think, I'd rather, for me, I think I'm looking rather at the future. Where do you go from there? Definitely data, cost of data is important to consumers. And we make sure in terms of design of our app that it's very much light in terms of data consumption, because you just need to be aware of that that's a cost element for consumers. I think that on the continent where we should really be going to in the future is actually zero-basing data, right? That's where we really need to go, because we need to start to see data like it's air. And for the vast majority of our people, that's where you're going to unlock a huge amount of the potential that is still very, very locked in on the continent. When we go zero-based and we start to look at business models that look at what does the data, what kinds of services does the data run on? What's the value that you're creating with that data? I think there's a huge potential there for both private sector and for government as well.
Amen. Juliet, I'm so with you on that point. And Zach, I'm happy that you raised it because I don't think we're there yet. I think we've made great progress, but I really don't think we're there yet. I was at in one of the towns in South Africa, in Tembisa, the other day, and I saw a few young guys. They were all standing with their phones in their hands, stretched through a gate. And I was like, what are these guys doing? And they said, no, that's a school, and the school has free data, free Wi-Fi. So they're all trying to get their phones within Wi-Fi range. That shouldn't be the case, right? That shouldn't be the case. We should actually be able to give even the most vulnerable people in our society access to this wonderful world that's at our fingertips. So I think we should challenge the regulators. We should challenge the big players in Africa. I've been watching India very closely, what's been happening with Geo there.
Yeah.
That's the kind of thing what we need to see in Africa. And I think there's a place for big players to come in and do another round of disrupting the disruptors on the telecommunications front.
Yeah, I mean, obviously, Facebook is not stupid when they decided to make that huge investment into Geo. Data is the new oil, data is the new water, whatever you want to call it. I have a 7-year-old daughter, and when she goes to any new cafe or restaurant, or even someone's house, before she asks for a glass of water, she asks for the Wi-Fi password.
Yes.
We all know how important it is. A quick sort of segue into financial services. I want to have specific thoughts here from Kun and Ashraf. Because the fintech sector led the revolution from a tech adoption perspective, I want to just get your thoughts on how the financial sector is adopting digital solutions to empower the large banks and insurers that have traditionally been wary to working with fintechs and insurtechs. And the same thing is true all across Africa: Egypt, North Africa, Egypt, Nigeria, South Africa, Kenya, and to a large extent East Africa as well. Just the reason I ask that is, so we were one of the first accelerators in Africa, and we struggled to get the likes of Standard Bank, Barclays, EcoBank, this is 5 years ago, to even understand the concept of corporate startup collaboration. And they viewed tech startups, fintechs, as either completely irrelevant, as beneficiaries of CSI or enterprise development funding, or completely, we'll give you some money as philanthropy to keep you happy. And that's all changed in the last 5 years. So maybe I'll start with you, Kun. How do you think large banks or insurance companies in Africa should work with fintechs? How does that partnership look like in an ideal world, given that you've straddled both ends of the spectrum now?
Zach, yes, and how things have changed over the last 5 years. Yep. If we take the South African market, I did spend a bit of time with a team analyzing every one of the verticals in financial services, short-term insurance, life, fractional share trading, digital assets, etc., etc. I would say in every single category in South Africa now, there's a fintech player who is doing a better job in their vertical than the big banks are doing in that particular vertical.
Absolutely. Absolutely.
And that wasn't the case. It was an idea 5 years back. Now it's the reality. And I think the game is on. I think the game for the big banks is, can you learn to actually partner in a fair way and in a sustainable way with the guys who are winning in their verticals? The banks still have two things going for them. The first thing is the cost of capital, which is always a challenge for the digital players and for the new generation players. The second thing is distribution. Whether we're talking digital distribution, physical distribution, and so on. And those are the two things that I think the banks can leverage off to play. However, if you ask me, do I think the big banks are going to get it right? My money would not be on them. My money would be on the new generation players learning to play well with each other, and learning that they don't own innovation, although they've done one thing well. If I think that the oil tankers of the last era will be disrupted by a fleet of speedboats, not by another oil tanker trying to get speedboats to latch onto them.
Absolutely. Ashraf, your thoughts, and then I'll get CK's and Juliet's thoughts.
Well, I think, at the beginning, we started 10 years ago, okay? At the beginning, everybody, the IT departments within the bank were the driving for automation. And always the IT department will tell the management, we can deliver the same in no time, okay? After some time, everybody discovered that this is a myth, okay? And the difference between, when you look at a startup, technology is the core. When you look at the bank, the product is the core and the IT is a support function.
Yeah.
And this is a major difference because being digital is not being automated. Being digital is managing the interaction and understanding the customer behavior digitally, where you cannot see him. And I think this is really where it lacks. Banks think that if you automate the banking, the mobile banking, okay, then you are there, okay? While fintechs thinks that if you create a better experience mixed with social interacting in this way and all the stuff, you are there. So the two dimensions are completely different. And you can even measure that in the West and in the States. Why there is Venmo? Can you tell me why there is Venmo? When you look at it, it's a very simple application.
Yeah.
Banks, even after that, have joined forces to launch something similar to Venmo. They couldn't. Okay. Although it is a very simple application, and being simple is actually the name of the game. So I think banks are starting to realize that they can focus on some parts, partner with fintechs on other parts, and things will evolve in that way. And what we are doing actually is we are sharing our data with the banks, and this gives them a little bit of comfort because they don't want to feel that you are taking the customers from them. Okay, so and we will not be able to offer the entire set of products being offered by the banks. Okay, it is very difficult from a capital perspective, from a regulatory and compliance perspective. So what we are doing is we are sharing, and this sharing enables them to have more products to their customers. Okay, and removes the friction about who will own the customer and all this stuff. So it's working this way with us.
Great, awesome. That makes total sense. I'm going to switch to Juliet for a second. The core concept of financial services being the prerogative of banks, as we all know on this panel, has been washed away in the last 5 to 7 years. Anyone, be it a retailer, a wholesaler, a healthcare company, everyone has to have a version of a core financial services offering to them. And leading that charge has been the e-commerce industry, right? So e-commerce as a sector, yes, has linkages with payment companies, with unsecured lending, with getting insurance on products on these platforms. But in your journey through Jumia, how has Jumia changed the game from being a one-stop shop for everything, including financial services? That would be super helpful for the 1,000+ people in the audience today.
Yeah, I think, thanks, Zach. That's a great question. I think, if I could just start from where Koen stopped, when he talked about the fact that he would put his bet on the new companies. It's really because there's no burning platform for the traditional financial institution companies, right? If you're a startup, if you don't scale, you die. So you're desperate to create. You're desperate for innovation. If you're a regular bank, hey, If it doesn't work, you still have your corporate banking fees to earn. So there's still life after fintech. So and that's the perspective that we came in, right? In excuse me, in e-commerce, because it's not about asking the consumer to open an account with us or load your wallet with us and try to use it for transactions. No, it's meeting the consumer where he is. What does the consumer want to do? Consumer wants to buy diapers. Consumer wants to buy food. Okay, so if you understand that, now what is the circle and ecosystem of transactions, of processes, of services that surround that single decision that the consumer wants to make in a day? That's how you do it. That's how insurance comes on top of it. That's how discounts from the seller of the diapers comes on top of it. And then the consumer says, that discount, hey, I can save it and use it for something else, right? That's how the seller, because he's got transaction history on the platform, can get lending from a financial institution because he doesn't have any other collateral but his transaction history on the e-commerce platform. That's where it starts. It's a completely different perspective that starts from where is the consumer, what do they want to do, what is the seller trying to do? The guy just wants to sell and to create a livelihood. That's how you create the ecosystem. It's that perspective and that mindset that's a real driver for us. Yeah.
Great, thank you. Thank you for those very, very insightful words. CK, I want to just ask you something about your experience having straddled both continents. You could make the argument that technology, both hardware and software, e-commerce and financial services in Asia are arguably 4 or 5 years ahead of their African counterparts, and you've seen both ecosystems work. What are a couple of things? What are some of the gaps, first of all, within and the obstacles in Africa that have been a hindrance to the quick adoption of these new technologies? And secondly, what are some of the things that companies in Asia can bring to Africa from a speed of adoption of technologies, given that you've seen both systems work in the past?
Great question, Zach. So I kind of like want to land off where Juliet has actually been talking about. You know, when you talk about banks in Asia, you know, they really have very low risk appetite. And if they are looking to lend somebody money, right, they will look for fixed collateral versus, you know, if I'm going to now pledge my commodity as collateral, you're not going to be able to, you know, attract any form of lending. So, you know, we're starting to see that there are quite a lot of new platforms that are coming online, where in Asia, they are putting all the documentations of blockchain, cargo collaterals, they are even putting them into, they're even digitizing them. By digitizing the assets, they were able to now pledge to the bank using IoT, using technology, a collateral that is, you know, on a blockchain non-fungible token basis. By being able to do that, you are starting to be able to now, you know, provide cross-border lending without even, right, touching the jurisdiction of the country. So I'll give you some examples. We have seen how Japanese banks were able to provide trade financing out of a Singapore fintech platform for cargo that are sitting, right, in China bonded warehouses. So this is happening, and to think about it, right, the Japanese, if you were to now think of interest rate in Japan, I mean, you're attracting negative assets, right? It's negative assets, negative equity. And if we're able to now find some way to provide that lending, says to the guys who are needing it in Africa, and finding the use of technology to help collateralize those assets. So hypothetically, if we can now find sort of like a safe haven for them, where this could be a tea exchange, or this could be one of these big warehouses, where computer vision is going to now help to digitize the cargo that are coming in. And the cargo could potentially be already inspected and certified, says, by the likes of one of the inspection company. and then they are now tokenized, they are now digitized, and present these now as the new form of assets where trade financing can happen, whether it's from a platform in Africa or a platform in Asia and attracting cheap Asian equity. I think this is something that we're seeing that is pretty game-changing. We are already getting huge amount of interest for Chinese traders who are now selling into Africa and trying to find ways to provide, funding for the buyers. So I see this conduit happening, right? And it's no longer a question of time. I mean, it's a question of whether it's going to happen. It's a question of time when this is going to take off.
Yeah. So sort of on that note, so when it comes to cross-border trade between Asia and Africa, I know it's a very hard thing to discuss. I mean, Africa has 54 countries. Asia has, I've lost track of how many countries Asia has. But, is that something that should be started by founders themselves? So founders should be looking to expand into Asian markets. Should it be started by investors, where investors are investing across regions? Is it a governmental thing? Is it large corporates? The answer is debatable, but I do know that from a founder perspective, I mean, a great example is, and I was pleasantly surprised when I heard about this. I mean, Time Bank is one of the most successful digital banks in South Africa, and their next core market is the Philippines, right? And I found that to be pretty, I mean, culturally, demographically, similar mindset, similar behavioral patterns, similar cost of acquiring customers, et cetera, spending habits. Kun, is it something that you think could be the future, where you see a lot of not just fintechs, but technology startups in Africa looking to expand to Asia as a first market and vice versa? And that could lead the way to larger telcos and banks and governments collaborating. But maybe the work has to start with our founders. Your thoughts on that?
Zach, I agree with that. Because when it comes to being successful in business, the devil is always in the detail. It's always about where will your particular business model work with reference to the structure of the market, the regulator, the mindset of the regulator, the structure of the competitive environment, and so on. And you make a very good point about Time Bank going into the Philippines. In many respects, as a neobank, the market structure in the Philippines has more in common with South Africa than almost any other sub-Saharan African country. So I would say South Africa, Egypt, and the Philippines are more alike than any of the other markets. In the same way, if you take the Philippines and Cambodia that's close to it, Cambodia probably has more in common with a country like Rwanda than it has with South Africa or with the Philippines. And so I think we're all misled. We all sort of have this geographic closeness bias. We think if we want to go to a new market, we go to the market next door. But maybe the market that's right for you is actually on the other side of the world. And as you say, we're now headquartered in Singapore, and we're seeing this. We're seeing a whole different view of the world with this in mind. And I think, the biggest single opportunity for me is all the founders in these markets starting to look, not as people often do, look to Europe and look to the States or look to China, to say that's where I want to make my fortune. But look across at the peer group countries that are a lot like your country and find the partners there to work with. I think that's where the opportunity is. And so I'll be a prophet here. I'll make a prediction. I think the next 5 years is going to see an explosion of export of innovation across Southeast Asian and African markets. And I'm very excited to hear CK speak about how the Internet of Things and new digital-based solutions actually are breaking down the barriers between countries that have existed, even at the level of funding. And I think we can probably have a whole session just on the Internet of Things. But I think these also cross-industry innovations that are starting to happen. We're going to see those actually creating sort of unique businesses that tap into unique niches that are actually imminently ready to be exported into other markets. And it's all about, Juliet, what you earlier referred to, which is contextual and embedded finance. This solution that works for that customer with that particular need and that particular value chain, and taking that solution to other peer group countries. Sorry, I'll stop there. I get so excited I can just go on this topic.
I can see how passionate you are about this. Sika, you want to maybe just add on?
I was just trying to say, couldn't agree more, with the points. Yeah, there are a lot of pretty similar so-called demographics, geographic, countries between Southeast Asia and that of Africa. So arguably, right, Rwanda looks a lot like Singapore, maybe about a couple of years ago, right? And they try to emulate a lot of what we do, and we also appreciate that. And henceforth, we're finding it a lot easier for us to bring technology, adoption of technology, as well as even to do business with these countries. Huge opportunity, and I agree with you.
Absolutely. Anything you wanted to add, Juliet or Ashraf, to that?
No, I think I totally agree with Kun and CK. Yeah, totally.
Amazing.
We should get together after this panel.
Yeah, definitely.
Absolutely. I'd love that. Let's talk about funding for a moment. It's a world that I'm no stranger to as an ex-banker and now VC fund manager on the continent. There's this perception, and I'm actually going to start with CK. There's this perception amongst the sort of broad, VC in Asia, even outside of India and China as the two giants, is probably second from a volume perspective to the US before Europe, right? So it's a US, Asia, and then Europe, and then after that, Latin America and Africa. Africa has always been an afterthought to a lot of VC funds and private equity funds in Asia. Why do you think that's the case? That is changing as we speak. I myself have seen several Japanese VC funds start investing in Africa. We've now seen SoftBank do its first deal. Where do you see that trend going forward, and what do you think needs to be done? Is it just better knowledge sharing with Asian VCs and private equity firms? What can be done to bridge that gap from a funding perspective?
Well, Zach, I'll say that you do find a lot of Chinese, wanting to invest into Africa, and it's been the last couple of years of trend. And they've all been, kind of like going there. But we do, I would say that initially when we were first in Africa 10 years ago, people are pretty shocked that a Singapore company, a startup, choose Africa to be a kind of like the starting ground to even land our first piece of decent business. And they were asking me a lot of questions, why? And I was telling them that, look, to try and now provide security services using IoT devices in Asia, out of, say, Singapore, it's going to be a lot more difficult than if I were to try to bring this to East Africa, Tanzania, Kenya, where the cross-border trade requires such an operation. So today we're tracking cargo all the way into Uganda, Rwanda, Burundi, South Sudan, So the key important question is opportunity. A lot of investors still do not really grasp Africa well, all right? But I got to say that they are learning about it. And once they get it, they get it. Because think of the size of Nigeria versus that of Indonesia. The guys who are investing in Indonesia today, when they are looking out for pretty similar demographic and wanting to invest, they will look for another pretty similar e-commerce platform that is out of Nigeria. Because they see that, they can emulate what they are achieving, all right, out of Indonesia in Nigeria. So, we're starting to see a lot of that happening. But I would say it's a lot of it is time. I mean, the initial understanding of Africa, there are still a lot of Asian that believes that Africa is just like one big country, but the whole continent of Africa has gone like, it's so different, like 54 countries, and everyone is speaking, almost a different language. Yeah.
You know what's interesting, and I want to get Ashraf's views here as well. Is from a demographic and cultural perspective, you're right. Nigeria and Indonesia are similar populations. Indonesia is the 4th largest populated country in the world. Nigeria is the 6th largest populated country in the world. Similar purchasing power, similar penetration of internet. There are so many cross references you can make there. But from a legal compliance perspective, I mean, this is a Singapore Africa forum, so I want to, not that I'm giving a plug here, but the reality is, over the recent past, we've seen several very prominent African technology companies move their headquarters, not from an operations perspective, but from a regulatory and governance perspective to Singapore, from an IP holdco structure. A couple of companies that we've invested in as Launch Africa, arguably one of the top ride-hailing companies in Francophone West Africa, GoZem. They operate in Togo, Benin, Gabon, Cameroon, but they are headquartered in Singapore, right? And that's all of a sudden, a small thing like that has attracted a lot of Asian family offices and VCs on their cap table, right? Is that something, I mean, and we're seeing more of these trends. We have a top Botswana insurtech company, Alpha Direct, also moving its headquarters to Singapore, even though the operations are primarily on the African continent. Is that a way in which maybe you can remove some of the unconscious biases against investing in Africa? It's just from a regulatory and legal standpoint. Just anyone's thoughts on that? Ashraf, Cohen, anyone want to add some thoughts?
I think there are a couple of issues here. I mean, you touched base on the regulatory framework, which is true. Currency is a major issue for investment. And when you look at Africa as 52 countries or 54 countries, the demographics of 3 of them or 4 of them are the only apparent demographics, okay? Which when you compare to Asia, okay, you will find that, so I mean, in Africa, you can count in terms of demographics, maybe Ethiopia, Nigeria, Egypt, South Africa, and then you come to much more smaller populations. So I think the investors are looking, if you look into Africa and you want a big investment or a big investor to come in, you have to be real Pan-African, okay? Because a single country is not there. Number 2, your valuation is hedged by the currency, which is reflecting in the stability of the currency and all this stuff. The regulatory issue is an issue. However, it is being sorted out, as you said, by having your headquarters here and there. But when you look again at the stock markets in Africa, liquidity is very limited. So I mean, if you are a company that is worth 3 billion or 4 billion, and you look at the average daily stock trading in any of those countries, you will find it very, very, very limited. Okay, so the investment in the stock exchanges of those countries again is very, very. So I think between those 3-4 issues, investors are a little bit sensitive, especially big ticket investors on Africa. Having said so, everybody is looking at as well, and that this is very large growth economies, still very much under-penetrated, still very much a huge opportunity. So I think that the reality is that if cross-African technology companies and startups and businesses have started to work together to create to those large investors what looks like a Pan-African investment that is sizable enough to attract those big tickets, I think things will look different. But as of today, when you go to an investment in India, India is India, is many Africans, okay, and so on and so forth. So I think more cooperation between and forums for cooperation between fintechs in Africa or technology companies in Africa with the objective of creating something that is pan-African would create a real momentum for larger attractiveness from an investor point of view.
Yeah, that's such a good point. I mean, on one of the an example that I often give to people is if you look at Flutterwave's growth. So I was one of the first investors in Flutterwave 4 years ago, and a key tipping point in Flutterwave's growth, I'm assuming everyone on the call knows of Flutterwave, sure, was Flutterwave's partnership with Alibaba and Alipay and eventually Tencent, right? It was not the huge check that they got from all the Series A, B, and C investors, which was great. But the moment they worked very hard on the Asia corridor, and the moment they had that partnership, a lot of Asian investors knew that, oh, the payment systems in Africa are compatible with Alipay, Tencent, WeChat, etc. Now let's work with them. And that's a huge opportunity now for someone like a Jumia to partner with Flutterwave and get a huge amount of Asian, not just customers, but potential Asian merchants selling on African platforms and vice versa. So I think the lead needs to be taken by the founders of tech startups to encourage that cross-continental pollination. And that the Flutterwave example was just one way in which, the default is, let me go to the US, let me go to Europe and look at either investments or corporate partnerships. People forget that the Asia-Africa corridor has a lot more anthropological and cultural similarities that are more important from a scaling perspective. And I just wanted to harp on how important that is.
Zach, if I can maybe add, I think that we have first-hand experience of moving our headquarters to Singapore. And I think that Ashraf is right that moving your headquarters to Singapore doesn't solve all the problems, the currency issues, and so on. Yep. But there's one thing that we've seen very clearly, and that is that it's easier for investors to invest in somebody in their own neighborhood than to invest in somebody very far away. And just being in the same neighborhood actually makes the building of those relationships easier. And then I would say, and yeah, I'm not marketing Singapore. Nobody's sort of paying me to market Singapore, but I would say the benefits of headquartering in Singapore goes far beyond access to capital. The fintech community here in particular is, I think, one of the most lively and exciting fintech communities in the world. So just from the perspective of exposure to talent, exposure to ideas, and then from an ease of doing business, it really just is a pleasure to do business in Singapore. And I would say all those things combined, when specifically South Africans love thinking of London or New York as the first place they want to go if they get out of Africa when they do a new thing. I would say to them, absolutely come and visit Singapore before you decide on London or New York. Juliette, of course, no offense to New York. I think it's a fantastic alternative, but I think Singapore, again, I'll predict Singapore is going to be a huge player, one of the top 3 or 5 players in fintech in the world. And this connection between Southeast and South Asia and Africa is one that we're just scratching the surface on.
Yeah, completely.
Yeah. Being Singaporean, I have to say something, Zach.
Of course.
And therefore, I mean, Singapore is a very strong, tech culture. As you have mentioned, Goran, I couldn't agree more. Besides that, right, the government is very pro what we call foreign investors who are coming in to bring their whole so-called the overseas HQ and deploy it within Singapore. We have a very strong, IP laws that safeguard your IP, and the immediate access to, say, the regions, financial markets, including if you are going to consider an IPO, is a lot easier if you're going to anchor it out of Singapore. Whether it's with the Singapore SGX, or if you're going to consider, some of the other markets that are nearby, Hong Kong, Taiwan, as a matter of fact, even Australia. So I think we do provide enough of these conduits within the Singapore ecosystem itself, where these access are made available. You don't have to fly too far away. And within 4 hours flight, we actually cover a pretty large region, including India and China. And we are also a very nice conduit of trade between India and that of China. What is also important is that we're starting to build many of these what we call trust corridor. So as an example, the Bank of Ghana has just started something new with MAS, the Monetary Authority of Singapore. They've actually started this financial trust corridor. And so that, there's this sort of like a visibility to trades done, flows of cash, so that all the anti-money laundering and, worries and issues are taken away. So I think there are various things to point towards the fact that we could be a very good overseas OHQ for a lot of these tech companies. Absolutely agree. I'm aware that we're running dangerously close to time. I could go on. I'm sure all of us could go on for another hour at least. But we do have quite a few questions from the audience. I'm going to try and get through them over the final 10 minutes here. There's an interesting one that I've seen about coming through about tech talent. It's an interesting one. We haven't talked about that. So when you talk about tech talent skills, people often think of India, Vietnam, Indonesia. Can Africa be the next development hub for tech talent? I'm assuming the person that's asked this question is talking about developers, designers, software engineers, but it probably extends beyond that into things like digital marketing, UX, UI, etc., and data scientists. Thoughts from the panelists about Africa being a tech talent hub going forward?
I can start on that one. There is definitely a potential there. There is a young population. They're digital natives. They're tech savvy, and what just is required is investment in the curriculum, investment in the hubs to make that happen. We just opened our first tech hub in Egypt, barely two or 3 months ago. And the intent is to start to build the home-based tech talent within the continent. So Egypt is the first one. Maybe in the near future we'll consider other markets in Africa as well. But I agree with you. There's a huge potential there, and it would be one of the things that the tech industry can almost like be like what we bequeath the continent with because of all the activities that we have there.
Anyone else? Some thoughts on that, or we can move on to another question.
Well, I mean, regardless of being a tech hub or not, but I can confirm that within Egypt and within other North African countries as well that we are in contact with, we have relevant tech-savvy good people, and we have developed our entire platform using Egyptian talent, and it is a very complex platform. So there is talent, they need trust, they need guidance, and they need to be paid well, because we have to understand right now that competing on tech talents is worldwide, because you can work for a company in the US while being seen in Egypt, okay? So this is sometimes an issue for companies because they cannot realize that they have to pay the price being paid internationally, but this is the reality. But if so, the talent is there 100%.
Got it.
Zach, maybe just one thought to add to that, and that is that the one thing that the COVID era has taught us is that talent can be liberated from physical location. And something that I'm loving right now working with the teams is to see very diverse teams from all over the world, different time zones, working together on projects, and the richness that brings. So I would say to Singaporean companies, hire a few people from Africa. It will enrich, even if you just ever see them on a Zoom call, on a video call. It will enrich your your business and your ability to develop lateral solutions to difficult problems.
And very, very good point. And to that sort of building on that is one of the things that the pandemic has taught us is that education. I mean, I'm personally very, very bullish on edtech. Andela was one of the top African edtech startups that raised a huge amount of funding from the Zuckerberg Chan initiative and then from the Al Gore fund generations. There's been a huge increase in digital learning and the training of people people call them digital natives now, but all the way from K to 12 to university, things have moved online. So to your point, Kun, and to Ashraf's point earlier and Juliet's, talent is transferable across borders. And it's up to the founders of tech companies like ourselves here on this panel to lead that charge. So we should be hiring from across continents, building more diverse teams, more women in tech, more young people in tech. And that's something that's very important. One final question or final couple of questions before I get asked to stop here. There's a question around seed funding around startups. This is something that's very passionate to me personally. There's a lot of interest from later stage VCs into Series A, Series B deals. Everyone wants to get a part of Flutterwave, a part of Time, a part of Fowry now, a part of Jumia 3 years ago. But where were these investors when they were 1 or 2 year old companies, right? This is one of my favorite questions that I get asked. We're leading the way from a seed VC perspective in Africa, but what message needs to be told to VC firms, not just in Asia, but Asia is a starting point, about seed funding African tech ventures? Because the reality is, unlike Europe, China, India, and North America, there isn't really a drop-off in valuation arbitrage, if you may, between seed and Series A rounds of funding. So if you're in San Francisco or Bangalore or in Beijing and you're a seed stage tech startup, your starting valuation is already $15 to $20 million if you've got an MVP. In Lagos, Accra, in Johannesburg, in Kampala, there's no way your valuations are anything more than $3 or $4 million at the pre-seed stage. So there is actually a huge arbitrage opportunity, and when ex-Wall Street bankers have to use the word arbitrage, that could be tapped into, and it provides rocket fuel to companies. So, I'm sure someone like Ashraf and Fowry was 10 years ago, you were struggling to raise capital from angels, and so was Kun and Juliet and everyone else. How can we change that? Just some high-level thoughts before we end the panel on seed funding for African investors. Anyone?
So I can give some Singapore example, right?
Yeah.
So the tech venture culture in Singapore is very strong. So the government lead the way as well. So presumably you're a VC, if you put money in seed, and if you're one of those that have been certified and authorized by the government, they will now match you dollar for dollar. So which means that if you find a company they're interested and they will try and mitigate the risk by saying we match you 1-to-1. For some of the VCs, they will even go up to 1-to-4. Which means that if this particular company, right, this startup is looking for $1 million, the government will come up with the 750,000, and the angels will only come up 250. So I think this is the sort of I'll say that there's an environment here to try and encourage for more startups.
Maybe we should match African and Singaporean startups working on the same things.
Yeah, definitely.
And get some of that government money flowing, sharing the love.
Well, all you need to do is just register the IP in Singapore.
That's actually a very good point.
I think, we started as Fowry in investing ourselves. And I think, in our countries, scaling and the number of opportunities is an issue for regions, okay? And the more we can, join investment with the capability of helping those companies to scale to the extent that they can grow, I think we open up. So, companies that are big, technology companies, banks, companies like Saudi, those have to come into the equation. because really it is not only about developing the technology, it is about scaling. The environment is not that easy to help companies to scale, and scaling is not easy. So you need the support of companies in the ecosystem. So I think more of company investments, even in funds, in other business direct, is helpful.
Perfect. And just maybe some parting words from Juliette on that note before we wrap up.
No, I mean, I can only say that I'm in agreement that those kinds of cross. I find the example from CK very interesting. The one on Singapore and how the government matches, and I totally agree that may be one of the ways to go. But I will actually broaden it to say that overall, I think the regulatory environment in Africa needs to take a different look at how Singapore is doing it in order to really allow tech in Africa to grow and to blossom. And if the example of what the Singapore regulator is doing in terms of matching seed funding is one of those examples, I think that's really the way to go. There are many other areas to touch on. Even in terms of the draft regulations that tech companies operate with in Africa. Those are areas I think that government needs to come into to really allow tech to blossom.
I mean, I know we're running out of time, but Startup Tunisia is a fantastic example. Startup Senegal is a great example. Mauritius allowing zero capital gains tax on investment. There's so many initiatives. The South African government significantly relaxed its loop structure for investors. So there are things that are happening. It takes a while. Rwanda is doing Rwanda is probably the closest comparison to Singapore on the African continent from an ease of regulations perspective. So yeah, let's just hope that things move on with the support of individuals like yourselves. So on that note, thank you guys. Thank you Kun, thank you Juliette, thank you CK, and thank you Ashraf for some really, really incredible insights. Over to you, MC.